Welcome learners for the today's session. Today we are going to talk about the SEBI, that is Security Exchange Board of India, its origin, development, activities and exchange stock in India. So let's get started. Today we are going to talk about what the SEBI is, what are the roles of SEBI, what are the functions and what is the organizational structure of SEBI. So before I start about the SEBI, let's understand what is the meaning of stock exchange. So stock exchange is basically a place where stocks are traded, which means there is an exchange of commodity or the stocks which are traded by the companies. For example, I want to raise capital and I want to go public. I would be listing in a stock exchange. Once I get listed in the stock exchange, investor would show the interest in my stocks. He would purchase the stock. So first time when he purchases the stock, that is called as the IPO, that initial public offering. After the stock is being traded in the stock exchange and people are rebuying those stocks, that is the secondary market, right? So shares and stocks are traded in the stock exchange. So this is the meaning of stock exchange. Now what SEBI does? SEBI is the regulator of the stock exchange. So we have 7 stock exchanges in India, but NSE and BSEs are the two prominent stock exchange in India on which maximum amount of trading is done. Trading or investing is basically done. So when I talk about the stock exchange, it plays a crucial role in the economy. That means money circulation is there. People or the organization who require the amount, who require the fund, require the money, they can simply get it from the public, right? Which increases the productivity of the organization, increases the value of the firm, increases the value of the capital, increases the value of the shares, right? So there are two methods through which trading can be done or exchange can be done, that is a direct method or the electronic method. Right now in India, we have been coming across that electronic method is prominent. Electronic method, that is the dematerialized account or we call as a demat account, from which we trade or we actually buy the securities, which security by mean is your stocks or shares, and we also sell it from the same platform. So there are multiple vendors such as your Paytm Money, your Kite, which is by Zerodha. These are the these are the stock brokers which provides the platform. From NSE or BSE, we can actually get the stocks from the market at current value. So that's the understanding of your stock market. If I talk about the penetration in the stock market is basically less than 2%. So only 2% of population is actually engaging in the stock exchange, which means there is a lot of opportunity available if people are educated enough and understand the risk and able to mitigate that risk with the right kind of information. It is very normal that people would be actually coming and taking those kind of companies which are blue chip firms, which have higher growth rate, which are promising, which have superior asset value, that those firms would be getting more number of investors in the coming future. As I've already told about the stock exchange, London Stock Exchange is the oldest stock exchange in the world, whereas Bombay Stock Exchange is the oldest one in the Indian origin. Basically, there are 7 stock exchanges, out of which NSE and BSE are two main indices. Now, coming to the main topic of today's session, that is SEBI. So, what is SEBI? SEBI is basically Security and Exchange Board of India. So, when I say SEBI, what is this? Is it some organization? What it is doing? So the main purpose of SEBI is to secure or provide a control or regulate the security exchange market. So basically, we realize that if I want to trade, if I want to buy the security of XYZ company, let's suppose Ambani's, let's suppose Reliance. If Reliance wants to ask the share, ask for the security, ask for the funds, what is the platform? That is the stock exchange. But if it is not regulated, let's suppose Ambani don't give me my money back after taking it. Who's going to ensure that? That's the regulator, so that confidence in the economy can be rise, right? So that money flow can be there, and we can trust that organization because it's a government body, because it was statutory body, regulatory body established by the government of India. We realize that CB is there, which is going to protect it. Just suppose it's a guard, it's a security, it's a watchman for all the stocks which are traded across the country. So in the country, SEBI is that body which is going to protect the interest of the intermediary, it is going to protect the interest of the investors, and also it is going to protect the interest of your companies, right? So SEBI also regulates how stock market and mutual market function. Now let's understand what is the structure of SEBI. So when I talk about the SEBI, there are certain key people who are going to be taking the leadership role. So how these are appointed? One is your chairman, that is the topmost authority. For example, in the companies we have CEO. Similar to that, we have one chairman on the board, which is appointed by the central government. So central government of India appoints that. So that is ensuring that it is in the favor of or the interest of the common people, not by one particular company, not by one particular organization. Rather, it is appointed as the central government person, so that he takes care the interest of the population at large. Then the next member is appointed by the central bank, that is the RBI. Now, what is the relationship between the RBI and the SEBI? See, these both are regulators. RBI is the regulator of the money market. That is your basically the money, that is the real money, right? Your currency market, foreign exchange market. Whereas the SEBI is the regulator of your securities market. So your currency is converted into securities. So if we understand that currency is flowing freely or it has inflation in the market, what would eventually happen? Securities would be purchased more. So yes, there is a relationship between the two. So to manage that there is a boom in the market, there is a recession in the market. So to manage that, we need a linkage between the SEBI and the RBI. Hence we have a one board member who is appointed by the Central Bank of India, that is the RBI. Then two board members are coming from the Union Ministry of the Finance. So Finance Ministry appoints two members, which again shows the agenda and the motivation regarding the policies. So these also try to regulate the policies in terms of providing the securities to the concerned people of the India. Then five members who are elected by the central government of India are authority and the power of the SEBI. Then what we have is that other five members are also from the central government. So you see, this is the government body. It is regulating the Indian economy in the sense of providing the shield to the investors, providing the shield to the common people, retail investor, institutional investor, and foreign institutional investors, and ensuring that the market is running smoothly. So that is the structure of the SEBI. Now coming to the objectives of the SEBI, let's take it one by one. First is the investor protection. As I've been talking about it, that investor protection is the first goal and first objective of the organization itself. That is the only reason it is formed. Otherwise, there is no significance of SEBI if it fails to protect the investors. That means it is ensuring that the companies which are listed are not the shallow companies. These companies are real companies having a real business. Then only investor is providing, providing in the equity. They are, providing the funds and taking the shares, as is actually doing certain business and will convert this business into the profit. If it's a shell company, that means there is no business happening. That means the value of share is going to be limited, or it is going to be depreciated, or it is not going to be there, right? So to identify what are the real illegal companies and what are the shell companies, this is one of the function of the SEBI. Next is preventing the fraudulent practices and malpractices which are related to trading, regulation of the activities of the stock exchange. So there are a lot of things which happen in the security board, which is basically a stock exchange, that people tend to inflate the price of the share by increasing in large quantities. So let's suppose there is a share whose price is 50 rupees, and there are certain people who intentionally buy the shares of that particular company in the larger quantity, and as the demand rises, the share price starts to pick up, and eventually when the price of the share goes up, investor has the interest to buy that particular share at that point of time. So when new investors look at that scenario, that this particular share is picking up, it is showing the more growth, he starts to invest in that particular share. And what happens eventually, those investors who have invested earlier, they simply dump these shares and the price value of the shares goes down. So that is a malpractice. When it is done, it is against the interest of the retail investors or the new investors who do not have the knowledge how to pick shares, and this kind of practice leads to the lot many losses, where people are actually, leaving, everything is, nothing is left with them. So to remove certain kind of problems, they try to identify what are the fraudulent practices which are happening, and they provide one report in the form of which they highlight that these are the companies which have been seen in the dumping and pumping of the money. Next is to develop the code of conduct for the financial intermediaries such as underwriters and broker, etc. So these people who are financial intermediaries and underwriters, they have fair knowledge about the market. So whenever somebody who's new to the market would actually take the advice from these underwriters and brokers, that where I should invest, and at that point of time they may mislead the retail investor or the institutional investors. So to reduce certain kind of activities or actions, it has developed the code that you have to abide by the code. If you're not abiding by the code, definitely certain actions would be taken against. Similarly, there are criminal charges which are against the intermediaries such as underwriters and the brokers, because you are taking away the money, you are taking away the hard earned money. Since India is a middle income group country, so people have limited amount of disposable income, and if they are investing, they have the aspiration to increase it, not to burn it. So at that point of time, so basically, the code of conduct devises that how things will proceed and what is the right information should be given to the investors. Next is to maintain the balance between statutory regulation and self-regulation. So you have to abide by the government and also ensure that self-regulation is there, that you are not doing any kind of misconduct with your investors. Now, talking about the functions of SEBI, there are three basic functions, that is protective, regulatory, and development function. So let's talk about the protective function first. Now let's talk about the functions of SEBI. First function is the protective function, under which It tries to protect the investor by prohibiting the insider trading, by checking the price tracking, promoting the fair practices, and financial education provider, which is provides the information to the investor. So let's take it one by one. So when I talk about the prohibitor of the insider trading, basically it is ensuring that insider trading is not done. What is the meaning of insider trading? It is basically when person has a knowledge about inside of the organization. For example, my company is coming up with a new technology, so this information is not with the public, but this information is with the people. Now what is happening, people of the organization, now what is happening, I've shared this information with my friends that the price of this organization is going to go high because they are coming up with a new technology. So before it goes public, you buy the shares. So what would happen, eventually I would buy the more shares, and people, when this information would go public, already the price of the share would be higher, and people will not get the fair chance to participate. Price rigging is, on the other hand, basically unnatural fluctuation, which means suddenly the price of a product, suddenly the price of the share is going exponentially high. That means there is a pumping of the money. That means intentionally the shares price is going up, and there is a soon time where the price would go down drastically. Reason being, that is the common method called as pumping and dumping. That's the price rigging. Third is your promoting fair practices. It ensures that the practices are fair, and it prohibits the fraudulent activity related to the trading of security. So you do not do such practice, provide misinformation to the investors. So these are the fair practices which are followed and must be the code of conduct for the SEBI. As already discussed, financial education provider, it educates the investor by conducting various sessions, that is online, offline, and provide the insights that how you can identify the good stock, how you can pick the right stocks, what is the meaning of PE value, what is the market valuation, what is the asset value, what is the quick ratio. So all these information, once you look at the chart, once you look at the profit for 3 years, once you look at the sales for 3 years, then you're able to identify whether this stock actually valuing something or it is something shady. So these financial education is given through the SEBI itself. Now talking about the regulatory functions. So what is the regulatory function? Basically it is the how the rules would be made. You know, what is the code of conduct and how it would be followed by the different section or the participants, such as the corporate, such as the financial intermediary. So these are the rules provided by the SEBI to the participants, and also ensures that what is the proper process of taking over of a company. So takeover takes place, such as your HDFC and HDFC Bank got merged. So what was the proper process of merging these shares into one? So that's the proper regulation takes place. So this is also the function to lay out the chart that how this is going to happen. Third is conducting inquiries and audit of stock exchanges, ensuring that these stock exchanges are actually following the trade practices which are fair in nature. Otherwise, there's no point of having SEBI in the first place. Then regulating the working of stockbroker, merchant brokers, etc. So it ensures that they are working in this right manner, in the same line of the code of conduct. Now talking about the development function. So developmental function refers to the steps taken by the SEBI in order to provide investor with the knowledge of trading and market functions. So basically the training happens, training for the intermediary and training for the stockbrokers, training for the investors. So these are the functions of the SEBI. Now let's talk about the purpose of the SEBI. So basically there are three main functions. One is for the issuer, another for the investor, and third for the intermediaries. Basically, these are the three parties which plays the role in the stock market. So who is the issuer? Let's suppose Reliance wants to raise the capital for 1000 crore. If it wants to raise a capital of 1000 crore, it is issuing the shares, it is issuing the funds into the market. So that's the issuer. Now, what is the investor? I am a retail investor. Retail investor is somebody who has funds available outside his business. So for example, I am doing a job, I have, let's suppose, one lakh salary, and I save 30,000 per month. So that 30,000 I invest in the stock market. That is not my primary business. That's not my actual business of investing, right? So these are called as your retail investors. Then we have the institutional investors who have the business of investing. So there are companies who are primarily into dealing of the investment, or rather, these companies have a surplus of cash which they are investing into different ventures. These are the basically investors. Third one is your intermediaries. So basically, these are the bodies, these are the organizations which provide the linkage between the investor and the issuer. So for example, I have opened an account with Zerodha, and with that account I'm able to buy the shares of Reliance. So once I'm able to buy the share of Reliance with the help of Zerodha, Zerodha would be my intermediaries. So that was about today's session. We have learned about the SEBI, we have learned about the functions of SEBI, its structure, how it protects the investors. So I hope you understood. If you have any doubt, please refer to the reading material. Thank you.